I led off by asking him if I could touch base with you on gold, and that's exactly what was coming out of your mouth at that very moment. So I want to circle back and ask you, please, starting off here with the gold market. Now, a very specific question for you, Larry. Knowing how you trade, knowing your analytical tools, and not knowing your trading account, you didn't tell me you bought gold Monday night, Tuesday morning, but I know you did because I saw the pattern, and it would be the sort of thing that you do. So that trade had won, or is a winner now. And my very specific question is, with that perfect AB equals CD decline pattern off the September 4th top, and having entered very close, either at the lows or within $5 thereof, I'd like to hear you describe trading tactics. Namely, are you booking a gain and taking, $35, $40 per COMEX contract out of it right now? Or are you letting a winner run to attempt to catalyze if, in fact, this is the rally that blows past September 4th top?
That's a good question, John. Basically, I was watching gold, and when we went above the $34 harmonic number, that pretty much, we got to take a break. You stay with us, my friend. I think it's an important concept to talk about. We'll be right back with Mr. Z from Philadelphia. 877-927-6648. God bless.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. We're talking with John out of Philadelphia, and we were talking about the gold, the fact that we had seen that 3 drive to a bottom pattern down there at that 1465, which was right at the completion of the ABCD pattern. We bought that, and what I do, John, is because I can't do too much short-term trading for the people at the 24/7 service that we have here at TFNN, I just tell them, put your stop at break even, take partial profits on some of it, and let one contract or half your position run is what I try to look at. What I'm watching now is to see what the correction will be. We haven't had more than a $7 correction since this whole thing started, so that's extremely bullish. But at any time, we could easily, since we went from 1465 up to 1511, so we rallied $46. So 38% retracement on that would take you down about $17, and that would be right at a harmonic number. So a $17 break in gold is what I'd like to be looking for to be a buyer.
Thank you on that. Just to add right to that point, I'll share this observation with you. Tomorrow, Friday, 8:30 New York time, is jobs data release.
Uh-huh.
I have observed COMEX gold trading in detail for 25 years, and have come to be familiar with the character of that market. One observation I'll share with you and your listeners about the character of COMEX gold is that odds are greater than 80%. And maybe it's 90%. I don't want to be too bombastic, but it's over 80% that COMEX gold price declines somewhat ahead of or into jobs data. So here we are Thursday, and it's, of course, Thursday at 9, and we're at 15:05. A $17 decline, or 23 even, which would be half of your $46 rally. A decline of one of those two numbers from right here into tomorrow morning, say 7 a.m., would be very typical of what COMEX gold does ahead of United States jobs data on, the first Friday of a new month.
Good.
So perhaps we get that sort of thing, setting up a buy at 8 a.m. right ahead of the numbers. Who knows?
That's if it's down there at that time, I think they would be setting. One of the things I just wrote myself a note is to check the gold tomorrow on Jobs Day. So we will watch that to see what's happening. But that's a good information to know. Folks, you folks don't know this.
Well, thank you on the your trading bias, position, and tactics here for COMEX gold. I wanted to follow up by thanking you for sharing with the TFNN audience yesterday the couple of pages produced by someone whose name I do not know, who is a student of Chris Carillon. And I reposted your post from yesterday in Tiger's Den just a half hour ago for any people who are interested to take a look at it. The bottom line of that particular person's timing work suggests the following. Good potential for an S&P and E-mini price decline, potentially very abrupt, going into October 25th, or October 25th, or the 25th of this month. So I thank you for sharing that. And as I just mentioned, the work comes from, I entitled it Anonymous, since I don't know the man or woman who did that. And that person certainly deserves credit publicly for me referencing that person's work. So in lieu of knowing that person's name, I'll just say thank you to that person. What I can say, I have been a student of Chris Carillon's since, 1993. It was back then that Chris published his first book, where he shared discoveries he had made, which were essentially astrological timing cycle discoveries. Discoveries that I had not seen anybody else come up with, nor have I seen anybody refer to since. Just by way of background, Chris Carillon in 1987 was an options trader on the floor of the Pacific Stock Exchange. I guess that would be San Francisco back then. And he was on that floor through the crash of 87 and was doing work in following years in attempt to answer the question, is there any way we can predict in advance when very abrupt movements in markets can occur from a timing basis? And he did some incredibly clever things and came up with some discoveries that were just mind-blowing. So I give kudos to him, and further say, just for anybody who's listening to us here, his work is not a holy grail. In other words, if you apply Chris's work, doesn't mean you're going to predict everything or nor the future. You do not. And Larry, you and I have proven that to ourselves over and over and over. Namely, there is no holy grail. However, there are great tools that you can put into your arsenal and employ your trading techniques and attempt to be more profitable than not. So I share that idea, posted in the Tiger's Den. October 25th has the potential to be a key low, and between now and then, that author's conclusion is there's the potential for an abrupt move, likely lower.
Okay. Well, that's close enough. John, when I sent it to you, I know those guys are very esoteric. I watched those folks down in California at the Don Mack Institute down there, where they had the bookstore, Jerry Bommering and Brad. What was Brad's first name? I can't remember. Bradley Cohen. All that esoteric stuff they were doing, and it frankly it confuses me because I keep it as simple as possible, trying to look at the patterns and a few other small things. But I wanted to share that with the folks because there is that potential. But what I'm seeing in the stocks is something that looks very bearish, and the fact that we can't rally here after hitting some key numbers yesterday is not a good sign. Hey, John, thanks for joining us, my friend, and I'll be checking on you Friday for that number into the jobs report for gold.
Thanks so much.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White has had some great trades in his daily trading newsletter, The Path of Least Resistance, and now's a great time to sign up while saving 25%. Just use promo code OPTIONS at checkout and you can save 25% off your first month. And this offer still comes with a 30-day money-back guarantee, so you have nothing to risk. Dave has had some great options and equity winners over the last couple of months. If you'd like to see for yourself the types of option trades he recommends for his subscribers, then check out all the details on the front page of TFNN.com. This offer only runs for 1 week and ends this Sunday, October 6th, so don't miss out. Head on over to the front page of TFNN.com right now for all the details and to start your 30-day money-back guarantee subscription to the Path of Least Resistance today. Remember to use promo code OPTIONS at checkout. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to change format here just a little bit. I've had several emails from 2 different people, one from Bulgaria and one from the UK, and it's regarding, when you take these monumental losses, what happens? Well, remember what Jesse Livermore tells you, that when you take a big loss, it not just destroys your capital, it destroys your trading spirit, and you don't want to have that happen to you. When I started trading, way back in 1959, I just started college, and I traded a little off and on, not knowing what I was doing. But I was more lucky because I didn't know how to sell short, and that was the bottom of the recession. And then when I got into graduate school, I started trading more. I started trading silver and pork bellies and stuff like that. So we're going to be watching here. So we'll see what. It wasn't 1813, Mr. Z. It was wow. Hold on just a second here. Did these markets break pretty big? Well, not too much, just a little bit. Pay attention here, folks, because those patterns. If we fail below yesterday's low with any impetus, that's not going to be a very good sign, in my opinion. So sort of pay attention to that if you get a chance. But what happened was I started trading real actively in graduate school, mainly corn, and that was because of the professor that I had met, and I didn't know anything about selling short. I had read Livermore's book, Reminiscence of a Stock Operator, and I was very young. I was actually when I was about 23 when I really started to trade actively, and I was taking money out of the market. Not a lot, but I was, hey, minimum wage was 75 cents. So, if you made a few $100 a week, that was quite a bit. So I was able to buy a nice little Porsche, and nobody in Terre Haute, Indiana had a Porsche. So there was one other guy that had it. He was an attorney there, and the reason why I bought it is it had roll-up windows, and I didn't know anything about, how cool they were until much later. But the only car that you could get with roll-up windows for a sports car was a Corvette, and that was way out of my price range. So I bought a little 1961 Porsche 356 Roadster that I kept for about 10 years and sold it for about 4 times what I paid for it, but that was because the Deutschmark was going up. Anyway, I had really never had any problems. I really didn't. I mean, I made some money, lost some money, made some money, lost some money. Then when I went to work for Lilly, I had more time to look at the markets, and I got involved in the big run-up in the Russian grain robbery in 1972. But I was trading pretty good size by then, and the problem was, folks, boy, oh boy, I was one. The only word you can say is a little overly zealous. I was really cocky. I mean, I was unbearable, actually, when I go back and think of it. My friends tell me I wasn't quite that bad, but I really wasn't. The one thing that I did do is I shared the wealth with other traders and stuff. In other words, if a trader would get into problems with margin, I didn't answer any margin calls for people, but I handled a whole bunch of debit balances, and then we were all together. We were we were actually in Roy Longstreet's office there at Clayton Commodities. That's where I met Twentyman in '65, and he was the broker there, and Roy Fassel was the manager. But then Roy sold the business to Conti Commodities, and they moved across the street to the brand new McCulloch Oil Building. That was one of the largest buildings in LA at the time, 20 stories, and they had the whole top. There were two suites on the top floor. They had about 9 or 10 brokers there. Ricky the Rocket Barnes was one of the original brokers. He's one of the market wizards, of course, and oh my gosh, so many guys were through that office. Mike Marcus traded out of there, Bruce Covener, Ed Sakota. I mean, it was a place to be on the West Coast. Anyway, I started trading there, and during 72, 73, I just couldn't do anything wrong because all I did was buy. I was using cycles. But what I'm going to try to do is to get to the point where things go really, really bad. Okay? And here's the key here. It was in July of 1973 that I reached the top of my trading at that time, and I had made quite a bit of money. But then I started to lose. I did everything wrong. I would buy, I would look at an 8-day cycle or 16-day cycle, and I'd buy it, and it'd go up for 2 or 3 days and go down for 9 days. Well, when you have a lot of money, you just buy more and catch the next cycle up. Well, what happened was I got caught into the fall of 1974, which was the big crash, where the Dow went from 1,090 down to 490. During that time, it doubled bottom between 1974 and 1975. Well, it affected all commodities too. So I lost all of my money. All of my money was gone. I mean, I had, well, let's not put it that way. All of my trading capital was gone. I spent a lot of money on the way up, and I put things away which was smart to do. But when I got to the very bottom on the last day, which was in October 1974, I got blown out of my last position, which was, I think I had 15 cattle on, and I got filled limit down. They were lock limit, and I didn't know how much a big loss I was going to take. But late in the day, they came off a limit, and I was able to get out of my position with a $2,700 debit. And that day, cattle closed limit up, which would have given me about a $20,000 profit. And it was the best thing that ever happened to me, was to go debit balance. And I'll tell you why. After I lost some money, I was in Santa Barbara at an Eli Lilly meeting, and we were at the Santa Barbara Biltmore, which is now, I think it's a Ritz-Carlton or something. It's really exclusive place right there on the ocean. And the first thing I did when I got back to Westlake Village was I called Jim Noblet, and I told him what had happened. And he actually laughed at me. And I felt rather bad when he laughed at me, and he said, well, come on back and we'll chat. So I took a plane back to he was in Louisville now. He was teaching there, and so I went down to Kentucky and I spent the day with him and stuff. And he told me, he said, look, he said, this has happened to everybody. He said, just go back over your statement, see what you did wrong, figure out a way to get out of it. And he said, you'll be fine. Anybody that can make a lot of money can lose a lot of money, but what you got to do is to stop losing the money. But I never had any doubt that I could not make it back. I had already known Don Mack, and he gave me the Gartley book, and John Hill was helping me all along. And so all during the rest of 74 and almost all of 75, all I did was study. Every day I would study a couple hours a day or more. And on the weekends, I mean, just read everything I could get. I mean, remember, there were not a lot of books about this stuff. These were old books that I had to get from Don Mack's library. Fortunately, he was kind enough to let me look at those. All these books are available now. So finally, I figured out a way that there was a nice pattern, and Dave McClure, Oscar McClure and Dave Nelson were both my mentors in soybeans, and they saw a real bullish pattern with El Nino and stuff. And I could see on the charts that we were at a beautiful Gartley pattern. And so I started to go back into the markets and buy, and I was very excited about it. And I got everybody I could think of to put up a couple $100 to buy some spreads in soybeans, July, November beans, and July D soybean oil, and then to see the market go up. And finally it did. And everything turned out to be okay. I never made all of my money back from that during that move, but it got me started. And then I went to work for Drexel Burnham Lambert, and I'll be right back. I hope you like this history, folks, because I ain't going to write a book. 877-927-6648.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, we're talking about my trading history and stuff and how I came back from losing and stuff like that. The main thing is if you can make money, you can stay in this business. What you have to do is stop losing, and that's the hard part to do, and it's a psychological thing. I'm going to skip through some of this stuff because most of you have heard it before, but here's what you really need to do. The book that saved, there were 3 books that saved me during that time. The first book, of course, was Reminiscences of a Stock Operator by Edwin Lefevre. I have literally read that book at least 50 times, and I'm not joking. Haven't read it recently over the last 7 or 8 years. I haven't, but I had it memorized at one time, pretty much. But that was a great book because it talked about stuff. But then I ran into Mark Douglas back in '83. But in '83, I was on the floor of the exchange, and things were good. But, I became very, very close friends with Mark and his wife, Paula. We hung out together up until he passed away on September the 12th, 4 years ago. But we worked every day together when he was here in Tucson. He moved out here in '96 and until 2001 when he moved to Scottsdale. We worked every day together, and a lot of these people would come in and visit. And in fact, Mr. Z's asked about Jack Schwager, the reason why they talked to me about that. But I never wanted to be in the Market Wizards book because I don't consider myself a market wizard. I'm a technician. I'm a good technician. Not many people can do what I can do because that's all I've done my whole life is look at charts. So I see pretty much what they're doing. But I certainly don't consider myself a market wizard, not compared to some of those guys that are in the book that I know them, but I'm just not in that league, and I never have been. Don't want to be. I mean, if I were, I wouldn't be able to do the things that I get to do, which I like to do, the mentoring and get some of these people to, do some of the things that I do. These patterns don't work all the time, but they don't. Here, present day, Mark's gone. So the one person, there's two things that I would really highly recommend if you're losing. One of them is Tony Robbins' work on neurolinguistic programming. I think it's called Power something. There's so much he's got out there, but you can buy them online at eBay, secondhand. It's a set of about 20 tapes, and it goes into neurolinguistic programming. And I've been all of the stuff that Tony ever did. I first met him when he was a kid in Los Angeles. Attended some of his first seminars, but that stuff really helped me. I still use it to this day. The other one that's very good is Adrienne Togaray, www. Trading on Target. That's www. Trading on Target. She's very, very good, and she's very, very helpful and makes things very, very easy. So keep in mind that nothing is perfect, and you're never going to get this right all the way, but what you can do is if you keep working at it, you'll be able to make it. Now, the key word here is to keep working at it. There's 3 words. Keep working at it. You're not going to get trading overnight. This business is all about, I used to think, Mark used to tell me it was 80% mental. I believe it's probably 99% mental, because if you can get that cycle between your ears straight, the rest of it's easy, because, you're just looking at certain things. The technical part of it is pretty simple, but the mental part is what you have to work on. So Adrienne has a little thing called that she does a asset thing that you take a questionnaire, and it helps define what some of your problems are being. But most of these things, because you don't have any experience in trading, you don't know how to handle losses. And if you take a couple of big losses, what it does is it prevents you from doing the next trade, which is invariably going to be the big winner. So that's what you've got to realize, that this business is all mental, and you've got to be able to understand that that's what it's actually all about. So once you can do that, you're far better off than if you're not doing that. That's the key thing to pay close attention to, is what I'm seeing. So if you do that, you'll be far better off than if you don't. So those are just a few things that I'm seeing here that I think could be helpful. Well, whether they are or not, I don't know. But the one thing is, don't ever give up. Never, never, never give up your dream if this is what you want to be, because, folks, you can do it. It just takes a little bit of time, a little bit of patience, and you'll be doing a lot better than you might think you will be otherwise, because it's very, very lucrative if you can do it, and it's certainly rewarding and a lot of fun. It keeps you young. I said, look at me. It's a good thing I don't play golf, because I would not do very well at it. Anyway, I hope that helps, but don't ever give up. Let's look at some of these markets now. I had to take a little break from watching these charts because they drive me nuts. I believe we're in the midst of a rally. That low that we hit yesterday is extremely important. We tested it in the S&P. As a matter of fact, that we went down to the 78% level of that low, and whether it's going to be stopping at that spot or not, I don't know, but nobody else does either. So the thing that you got to realize is that you're dealing with something that could be pretty negative if these markets, turn lower from this level. They're not right now. We've got the Dow up about 50, the S&P's up about 10, but at any time, if this thing gives up, it's going to look relatively nasty if we go below the lows of yesterday, which I don't believe we might today. We've got a chance. And that's the $64 question there, is the chance. That's the thing that you want to sort of remember as we go through these things. Regarding the gold, I think we've got a chance for gold to make a $17 break from the high that we had at 15.11. That would take you down to around 14.97. So there should be strong support in gold around 14.97, because it came out of here very, very strong off of that ABCD pattern that we were looking at. That's a big move, folks. If you remember here, we'll just draw this up, because this is where we were on Sunday, and we were thinking we were going to get down there, and you can see we went right down to that level and hit it, and bada bing, bada boom. It's had a pretty good rally. We're trading at 15.06 right now, and that's a pretty good rally off the bottom. It hasn't quite matched. If we match the last rally that we had, it'll take us up to about 15.20. So gold still looks bullish. That's the main thing. So we'll watch to see what's happening here. Okay, let's see. No, well, we're almost at the end of the show here. 877-927-6648. Keep in mind that we're coming off of some pretty bad down days here. We're down about 800 points in the Dow in a couple of days. We're having a little bit of a bounce this morning. It might be a little more substantial than most people think, but that's what we're keeping an eye on here as we look at some of these things today. The fact is that we've only been able to rally about 100 and some points a couple times in the Dow Jones. Is not a good sign, but it's not a bad sign either, because it's not going down yet. But if we go below Friday's low, if we go below the lows we met yesterday, that's not going to be a good sign, because we've been down here for a while. There should have been some buying coming in. It's been a little bit, but not very much at all. So there's a possibility that it could get a whole lot worse. So let's keep our powder dry and see if that's going to be the case. But below the low of that yesterday would not be a very good sign. I think we have a caller coming in. The banking index. I haven't got it up to date, Mr. Z, but let's take a quick look at it up here. I always look at it. I don't know how much it came down. This is where we were Friday. I imagine that it broke quite a bit. Yesterday, you can see we had a double top up there between April and August, and this top we had the other day was a little bit lower. I would assume. Oh, we've got a caller from Michigan. John, are you there?
Hey, I'm here, Larry. How are you today?
I'm good. You have to stay with us till the break. Can you do that?
That's great. I can stay.
You bet. Thank you.
I'm I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've got John on the line. What can I do for you, my friend?
Larry, I'll try to make it quick. Love your show. Love listening to you. I just caught the tail end. I came in and I heard you talk about a 78% retrace on the S&P or on the SPY. Is that correct?
Yes, that's correct.
Okay. Now, my question is this. Do you ascribe to the theory that on a Fibonacci pullback, if we pull back to, let's say, 38%, we'll have a big extension. We'll have a bigger extension than we would on a 78. And on a 78% pullback, we have the chance of having a run back up and creating a double top. Do you ascribe to that theory?
Yes, they certainly do. If you get above that 78%, there's a high probability that's where you're going to go. I would have to agree with that, yes.
Okay. Larry, I love your show. I love listening to your stories. Yours,
okay.
You know, mine is a little bit similar to yours. Made a lot of money, lost a lot of money, took a long time to get back into the market, like you said, psychologically. Mm-hmm. And I read Mark's book probably back in 2006, and I forgot everything that I read after I got crushed. You know, I crushed myself in the market. The market didn't crush me. I crushed myself. So I love listening to your stories. Keep them up.
Okay, well, thank you. You made a great point there. It wasn't the market that crushed you. You crushed yourself.
That's right.
So people have to remember that.
About how cocky you got.
You bet, John. Yeah, thank you very much for calling in. Certainly appreciate it. Well, somebody called in. Al said the lines were lit up. Luckily, he was able to get through. 877-927-6648. So we'll see how these things go. Folks, we're coming up to the end of the show. Live every day in an attitude of gratitude, and may God bless. And we'll keep you on the flip side. Be careful of yesterday's low. If we go below that, I don't think that's a good sign. But, like I say, wrong a lot. But you got to. We'll be seeing what's going on here. We've got one more question to answer, and that's about it. So we'll be able to talk to you folks tomorrow. So may God bless.